Cashflow Pro offers free money management advice to help you take control of your finances. And now here's your host, personal finance enthusiast and licensed insurance broker, James Barber.
Hey, good morning. Good evening, everybody. My name is James Barber, here to help you maximize your cash flow. Welcome to Oregon Cashflow Pro. Seems like morning because I just woke up from a nap. thought I would lay down for just a few minutes, and I ended up falling asleep. Now my eyes are still blurry. How's everybody doing this evening? Did you end up having a good day? This is our Wealthcare Wednesday live stream. We're here to help you answer financial questions, maximize your cash flow, dynamic banking, infinite banking, life insurance, credit cards, rewards, you name it. If you got questions, I might be able to answer. So if you got questions, put it in the chat. That's how this thing works. We got two ways that you can ask questions. You can put a question in the chat, or you can go to my website and actually leave me a voicemail message. Don't have any voicemail messages this week, so we're just here to answer questions in the chat. Malik, hello, how are you doing? You've been watching for a while now. You heard me talk about infinite banking policies with Whole Life. Which carrier deals with that? Today's been good. You just woke up from a nap as well. Okay, good. So infinite banking is just a process of utilizing an asset, a financial tool, in order to do your own banking in your life. Now, it doesn't have to happen with life insurance or whole life insurance. It just happens to be a really good product for being able to do that and get a lot of benefits from it. So, infinite banking is essentially what we're doing when we use whole life insurance is we can take some of our money, use that money to buy this product, in this case whole life insurance, but you can do this in a number of different things. And with that product, we're going to get guaranteed growth at higher than the rate of inflation in most cases. That's the idea behind it. And excuse me. And the ability to access those funds when we need them. And in the meantime, it's going to grow. When we access it, it's still going to grow. It doesn't interrupt that compounding process. And in this case, it provides us with the death benefit to go along with it. So a lot of good reasons why we utilize life insurance for doing that. Not all life insurance policies work that way. Not all of them work the same. Not all of them are great. It does come down to, one, finding the right carriers, and two, getting the right policy design. If we do those two things, then we just increased our odds of having a really good policy through which to do infinite banking with. There's probably 1,000 different insurance companies out there in the US alone, so there's a lot of them. Not everybody does whole life insurance, but there's a handful that do a really good job. They offer a really good product for whole life insurance. Even those products, at a few of those companies that are there, even those products can be designed badly so that they're not going to work as optimally as I like to make these things work. Okay, let's put it that way. I can still take the best product out there and design it to benefit me as opposed to benefiting you. So me as the agent. I can design it to put more money in my pocket than in yours. That's just the reality of the situation. Vipakar, how are you doing? Good evening. So it's important that you find an agent that is willing to connect you with the right carriers and design the product to meet your needs, as opposed to meeting their needs. So a handful of carriers out there offer really good products that can be designed well, and then we do need to design them properly in order to get the most benefit out of them. So when you ask which carriers do I deal with when it comes to infinite banking policies? Infinite banking can actually be done with whole life and IULs, although your traditionalists hate the idea of an IUL being used for it. But realistically, as long as the policy is designed properly, the infinite banking process itself, I mean, it can be done with a savings account. It can be done with a retirement account. There's a bunch of different tools that we can use to actually do it. It's just that those don't actually work that well. They don't offer all the benefits that using a whole life policy does for doing it, or an IUL. The whole life offers some more guarantees than an IUL, but they can ultimately both work pretty good. So for the carriers that I would look to, Mass Mutual, Guardian, and Penn Mutual for whole life companies. Those are the top three in my mind, and the top three that I'm familiar with. With IULs, my favorite IUL working out there right now is Allianz. Allianz, they only have one IUL, and it's just a great product. Great product. So those are the handful that I do most of the writings that I do with. I still do a little bit with National Life, although less and less, because they've reduced their National Life is for, I don't like their whole life. They do offer whole life, but it's not a very good rate of return because it's not a mutual company. So you end up splitting what would normally be a dividend that goes to the owners of the company. It ends up getting split between shareholders and whole life policy owners. And so it doesn't end up being a great product from a return perspective. But they do have a decent IUL. Now they've been lowering the caps on that, so it's not my favorite IUL at the moment. Allianz takes the cake, not just because really good returns, but they've got really good index options, and the way that I can design those policies it's awesome. It's incredible. If you got any interest, I would urge you to sign up for a one-on-one meeting with me. I'm going to put my link here in the chat, where it's at calendly.com/cashflowpro. And there it is, posted in the chat. Feel free to sign up for a one-on-one meeting with me if you would like to see how some of these policies might fit in your situation. And I'd love to meet with you. I've been meeting with you folks basically nonstop for the last, at least the last year now. And every day, I mean, it just gets better and better. I love meeting with you guys and answering your questions and showing you what's possible with these things. It's just a lot of fun to design these policies to the optimal benefit. And I constantly get people ask, because when we meet, I show you how I design these. I show you why I design them the way I'm doing it, and I walk you through step by step on what makes this a well-designed policy. And one of the keys to that design is minimizing the agent's commission in order to maximize the cash flow that your policy gives from day one. And it actually increases the cash flow, not just that first, from the very beginning, but every year thereafter. And I constantly get people going, okay, I get that, and that's great, but why? Why are you doing that? Like, this seems too good to be true. Why would you do that? Why limit your commissions like that? Well, it's still good commissions. I mean, I was looking at a policy design that somebody had designed from another agent, and the commission that that policy was going to pay the agent was over $40,000. The commission, I designed that same policy, and the commission was about $3,000. I mean, you're talking a big, big, big difference between commissions. And it doesn't take very long to do this. Like, I don't have to spend a month putting together a policy for you, getting to know you, figuring out your situation, and then designing the policy. That does not take all that long. So why do I need a $40,000 commission? I mean, yeah, it'd be nice. Not going to turn one down if it was forced on me, right? But I don't need that. You know, when we're talking about from a business perspective, or let's say an hourly rate, like I put all my content out here on the internet and on YouTube so that you guys can learn how to use these policies and what you can expect from them and why I sell them, why I promote them. My goal is that you're going to know as much about these ultimately as I do. Like, I try not to hide anything when I put together these videos. And so when we end up meeting and getting together and taking that next step into looking at how this policy might fit into your schedule, it doesn't take a whole lot of my time to get the picture from you, the financial picture of yourself, and then figuring out if there's a place for these products in that, and then designing it and showing it to you. So I might spend a few hours talking with you, going over your financial situation, and designing a policy. I don't need $40,000 for spending a few hours. And then we got an hour to put together the application, and then maybe another hour, you know, to get it through underwriting and deliver it. It really doesn't take all that long. So let's say at most 10 hours, start to finish on a policy, okay? 10 hours start to finish. If I made $40,000 commission on that, that's like $4,000 an hour. Sorry, I'm not worth that much. I don't think most people are worth that much. I wouldn't feel comfortable paying somebody $4,000 an hour for multiple hours just to do something like that, design a policy. Now, ultimately, if you get the right design policy, it can certainly be worth it. But if you're giving up $40,000 to somebody, the policy's not going to be designed well enough that it would actually be worth that. It just isn't. It's so much more. It's so much more of a beneficial product from out of the gate if it's designed correctly. Something that I like to point out. Why doesn't everybody do this? I get asked that question too. Why doesn't everybody do this? Well, you get a lot of people out there that have had bad experiences with these policies. They get badly designed policies that they're committing too much money to, and ultimately, if they stumble financially, they may have to give up the policy. They may have to let it lapse. They're not going to be able to afford to make those payments. So if somebody's putting $12,000 a year into this policy, let's say they start a policy with you, you convince them to put in $12,000 a year, and that might be a stretch for them, but you know, they see the potential, and you've made the policy sound really great. But you designed it badly with a high commission, and they have no cash value in the first year. Sure, this thing will look good 40 years from now. They'll all predict to look really good 40 years from now. And that just might be the case. It might turn out just fine 40 years from now. But if they stumble financially in that first year, and now they have a trouble meeting their other financial needs, because there's no cash value in that policy, they may have to give it up. It might lapse. And now, when they're talking to their friends and family that's going to be a story that is not a good thing for IULs. They're going to say, that was the worst decision I made in my life. I lost $12,000 because I bought that, and then I got into financial trouble, and I couldn't make the payment, and it lapsed. And I had so much surrender charges, it just went away. I didn't get anything back from it. So that product in that situation would be a massive burden on that person who originally got into it thinking that it's going to be a good deal. And they probably didn't think that they needed access to that money right away. And so you as an agent might have thought, I'll be okay taking this nice hefty commission from this person because they're going to be fine in 40 years. This policy is going to be great for them. But they never made it that far. Now let's flip that around. If you design the policy to best meet your client's need, minimize your commission, it's still a good commission. Like on that one example, $3,000 commission, if I'm spending 10 hours, that's $300 an hour. That's still more than enough. That's still more than enough. And, I bring these down and minimize them as low as I can because they do have limits on how low I can make it. So if you design it properly and they have, instead of no cash value in the first year, they put $12,000 into it, and maybe they have $8,000 or $9,000 or $10,000 available in that first year. Now, if they stumble financially, they can look to that product as support. That product can actually save them from their situation because of its liquidity, because we gave them the ability to be able to access those funds. So yeah, they put a lot of money into it, but it wasn't illiquid. It wasn't locked up. Like a lot of people with retirement accounts, you're always told, commit as much as you can to your retirement account, get that pre-tax savings, and people end up putting a lot of money into their retirement accounts, oftentimes too much. They stumble financially, and maybe they don't have access to that, and now they're stuck. Now they have to get at it, and they have to pay a 10% penalty. That happens all the time. And so people that thought that they were doing good by putting this money that's going to get locked away for 20 or 30 years, now suddenly they need it because an emergency came up and they weren't prepared. And now they've got to pay penalties. And so not only did they have an emergency, but now they've also got to pay penalties on that. They're going to have to pay taxes on it when it comes out. And so it just compounds the problems that were created by whatever caused that emergency need. So if we design it properly, and now they have a product that the cash value is liquid and accessible even in that first year, even within the first 30 days of beginning that policy. Now people can feel more comfortable committing larger amounts of money to these products that have really great guarantees and really good growth opportunities. But if they stumble financially and they can use that to help support themselves, now that conversation with family members becomes completely different. Now, instead of it being the worst product they'd ever bought and they'd never recommend it on that anybody get it, now this is a great thing. Look at how well this is performing. And when I had my troubles, when I got into financial trouble, I was able to access that cash value and it saved me. Like I was so happy. That was the best purchase I've made. You see how that conversation changes? It becomes a whole new outlook toward these types of products. And now suddenly you might have more customers, more clients. So by designing these to optimally benefit the client as opposed to yourself and your agent's commission, you're going to be able to turn that into more opportunities down the road. Yeah, you're not going to get paid as much. You're going to get paid as much per hour of your time, but it'll be okay. It'll be okay. So hopefully that answered your question. Good, Malik. Says, you've been in the insurance game for 6 months. You really enjoy it. Love my IUL advice and strategies. Thank you. Thank you. What are you doing? Are you an agent? What kind of What kind of products do you find yourself drifting towards? All right. So I love it when other agents actually see my videos, because it's impossible for me to help everybody out there. Like, I just can't service every client out there that wants life insurance. And so my hope is that other agents see my videos and learn how to design better policies for their clients, so that they're in a good position, so that those clients are in a good position to tell the good story about these products. It just helps the industry overall. It helps the industry overall, and it makes me feel good knowing that we're getting that information out there. And I do talk to quite a few agents. Agents set up one-on-one meetings with me. I show them how to design policies better. Some agents choose to connect with my IMO and some of the carriers that I work with and work underneath me, so that I can show them and work with them on designing policies. And what I'm looking to do in the near future is I do have some folks who are joining as part of my team, but we're still independent. But they're underneath me as part of this hierarchy. It's not a multi-level marketing thing, but the way insurance companies work is they will put you on, we'll call it a team, okay, where you will get a little bit of a commission. You'll get a little tiny split of the commission of the people that are working with you as part of your team. Okay. Now there are multi-level marketing organizations out there that, you know, when agents work, basically their whole business model is you got to recruit agents in order to get paid commissions, in order to get paid decent commissions. And it's typically not a very good situation for the insurance agents. Like, they get paid a really tiny amount. So with the design that I'm talking about, when I'm bringing people in on my team, they still get paid nearly all of the commission that they should be getting if they were just off on their own. If they were just off on their own and contracting directly with a carrier. It's just a little tiny percentage that goes to me, and I take on the task of showing them how to do these things. And then the bulk of the effort, the bulk of the training, if any training is needed, and developing your business, happens at the next level from the IMO. So the people that I work with. So there's ways that we can do that and train agents to get better. And what I'm looking to do in the near future is offer, because my schedule is packed. I mean, people are trying to book meetings with me, and it might take a week and a half, maybe 2 weeks sometimes. So it ends up being really hard for me to even meet with everybody that just wants to meet with me. So what I'm going to do here soon is open up some additional slots where people can have the option to not work with me, but if they're on more of a accelerated time frame and they don't have time to wait to meet with me personally, they can meet with somebody who's working with me, with somebody who I've shown how to design the policies as best that we can, and I can connect you with them, knowing that they're going to treat you as well as I would treat you when it comes to policy design. And of course, I will still be available for advice and to talk, and as well as that agent. So it's like you get 2 for 1 in that case. So and some of them will be able to speak other languages, which will be very helpful as well. So, because I don't, I'm terrible. I'm terrible with speaking other languages. As much as I've tried throughout my life, took a few years of Spanish, but it didn't stick. That was a long time ago, and it didn't stick. I don't get the opportunity to practice it. So all different kinds of folks out there that we need to be able to reach that I can't do alone. So I really appreciate seeing agents come on and learn from my material. You're doing IULs and annuities. All right, nice. Chris, how you doing, Chris? Life insurance has a bad rap overall. Not that they're bad, but what are the best benefits for folks? So when it comes to life insurance, I'd say the best benefits, well, the number one benefit is that death benefit. The death benefit is great. It's tax-free to your beneficiaries. So that can be utilized as part of an overall financial plan to really good use. A lot of people can use that, even if it's a badly designed policy. Now, if we can get a well-designed policy, the benefits just multiply at that point. So the benefits for a well-designed policy can be living benefits, to where you get access to that full death benefit prior to you passing away, in the case of like terminal illness or critical illness or injury. We get guaranteed growth in some policies. Guaranteed 4% growth is amazing. Like, you're not going to get that anywhere else. We get downside protection in some policies, where you get the opportunity for market type growth from an index without the risks of actually being invested in the index. So if the market falls out from underneath you, you're not going to lose half of your nest egg. That's amazing. You know, there's not many products out there that will do that for you. Annuities are out there, and I don't do too much in annuities these days. I started out doing more in annuities, and they had better rates. The rates just aren't that great for annuities these days. And if I had to choose between an annuity or a life insurance, if you can qualify for the life insurance, if you can qualify for a good rate, I would choose the life insurance over an annuity in nearly every circumstance. There can be a good use for an annuity, and sometimes you can utilize both. There are sometimes you can change your cash value that you build up in a policy. You can annuitize that within the policy. It's not necessarily, I don't know, you just don't see as good a rates when you annuitize stuff as you can if it's like, if it's a really well-performing IUL. Let's put it that way. If it's a well-performing IUL, you can get a much better return than you can with the annuities out there. But the annuities, you make a trade-off. You're trading a little bit of growth for a lot more guarantee. So there's always trade-offs to be had there. But yeah, the benefits: growth, downside protection, death benefit, access, liquidity, guaranteed access to the funds. I mean, those are all really great reasons to check out life insurance. Hesleg, how you doing? Good evening. Good evening. I forgot to bring my water in here. I might have to go grab my water. I can feel my voice is not going to make it for an hour if I don't have some water here. So I might have to go grab it. So hopefully that answered your question well. Who else do we have? Who else do we have in the house? Hesleg, how's your finances doing? You got any questions about maximizing your cash flow? Are you guys utilizing lines of credit out there? Are you utilizing lines of credit? Have you seen my videos about dynamic banking and utilizing lines of credit in order to maximize your cash flow? Krish, how you doing? So if you haven't noticed, I'm a big fan of lines of credit and utilizing that to maximize your cash flow. Being able to offset interest charges. Now, the life insurance policies that I design and sell, they work just like lines of credit. But if I had my choice, not really my choice, in an ideal situation, I would have both. I would have both a line of credit and one of these high cash value life insurance policies. And if I have both of those, I can really maximize my cash flow, because the line of credit I can get access to that money instantly if I have it at the same place where I do my banking. Same place I do my checking. I can transfer money instantly. With the life insurance policies, it takes a couple of days at best in order to transfer money into it, and then another couple of days to get the money out. And there could be some processing in between that. So you're not going to be able to offset interest charges in just a few minutes like we can with a line of credit. So with a line of credit, we can really take advantage of every dollar that flows through our hands. And that's when things can really start humming. Chris, your lines of credit are coming into almost bearing interest rate. Refinance or what? Meaning the interest rates are high. They're business lines with 0% for 12 to 18 months. Oh, okay. You must be talking about credit cards. You must have some business credit cards with 0%. Correct me if that's not the case. I would absolutely look at refinancing if it's credit cards at 0%. So my recommendation would be to get a business line of credit if you can. Not just a business credit card, but an actual line of credit that you can put money in and take it out. Okay? Those are the best tools to have. Absolute best tool to have. And if you get a line of credit like that, you can use that line of credit, and the last month of your 0% interest on your credit card, you can pay off that credit card, bring that credit card balance to 0, and then go apply for another one. And when you get the next one and you got 0%, you can start to use that for all of your purchases and just build it back up at 0% until that one runs out. And in the meantime, all of your income gets into the line of credit and offsets that interest. So you took that credit card balance, you moved it into the line of credit, which the line of credit does not give you free use of money. You might be paying 6 or 7 or 10% interest on a line of credit, but that's okay because you're going to take all the income from your business and you're going to offset it. And you're going to bring that average daily balance down really low. So the overall cost of that insurance is not going to feel like 6 or 7 or 10% interest. It's actually going to be more like 1 or 2 or 3% interest. And when you need to pay your bills, you do that right out of the line of credit. This is what I call dynamic banking. And by utilizing your line of credit that way, it allows you to maximize the use of your credit cards, allows you to get the most rewards. You get to utilize either the 0% interest, or in the case where there's no 0% interest, you get to utilize that 30 days of free use of money. Because if you pay off that credit card every month, there's no interest charges. So we always want to maximize the use of every dollar that flows through our hands. Those lines of credits are awesome for being able to do that. And any business owner should take advantage of that. Because as a business owner, you don't get to see near the benefit of all of the dollars that flow through your hands. When I had my pressure washing and window cleaning business, we had $300,000 go through the business hands in a year. And only a tiny part of that would come out as part of my benefit. I would plow the rest of it back into the business. I'd only take out a little bit from my paycheck. And so I didn't know about this at the time. And so I didn't put that $300,000 to use. I only got the personal benefit of a small portion of that. Whereas if I was using dynamic banking and infinite banking, I could have put all $300,000 to use on my personal side and on the business side in order to take advantage of every one of those dollars. However short, however little bit of time it flowed through my hands, I could have put it to use. So I spent a lot of money on gas every week. Okay, probably like $1,000 a week in gas. Okay, because we did a lot of pressure washing and a lot of driving. So I would get paid, and I would have to spend that money on gas, $1,000, right? So I might get paid, and that money might sit in my account for a few days, and then it's going to go out and it's going to pay a bill. It's going to buy my gas. It's going to pay for repairs, whatever the case may be. Well, back then I would just get that money and it would just sit in my checking account, and then a few days later it would pay a bill. Had I known how to do dynamic banking, and had I utilized a line of credit instead, those 3 days that $1,000 is sitting in my account before it goes out and it buys all the gas I need for that week could have been offsetting interest charges. 3 days, 5 days, 7 days, maybe 15 days, however long that money sits in my account. I'm offsetting interest charges, and that's saving money every single day. So, Krish, can I do a video on options or like a brief overview of what options are good? I am putting together an options course. So I'm not planning on putting out any videos on it until after that, because it's just a lot of work. It's a lot of work to go into that, and there's so many topics I have to cover, and it's a challenge. It's a challenge for me getting the design right so that I can make sure that I cover everything that I need to cover for those topics. I want to put out a good product so that you guys can really benefit from it. And they're just, the opportunities are amazing. The opportunities are amazing that they offer. And so I'm excited to be able to share that. But I'm not going to be putting out a video on that until I get done with that course. So bear with me. It'll be coming. It will be coming. Chris, you have a line of credit as well. What you meant was, do you use the line to pay down the credit card? The traditional one's at 4.5 versus 19% on the cards. Okay, absolutely. Absolutely, you use the line to pay down the credit card. But I would wait to do it until the last month that you get that 0%. In the meantime, all of your income's flowing into the line of credit, keeping that balance down, offsetting the interest charges. I run into a lot of people who get 0% lines of credit or 0% credit card offers, and they'll charge them up, and they'll pay on them each month. Like they'll take, let's say they've got a $20,000 balance, and they've got 6 months of 0% left. So they'll take that $20,000, they'll divide it by 6, and that's what they'll do for their monthly payment, so that by the end of that 6 month, it's all paid off. Now that's okay. That's like the safe way to do it. Okay, but you're not maximizing your cash flow because you're putting money into and paying off a debt that's not charging you any interest, when you could be putting it into an offsetting interest in a line of credit. So it's not maximizing your cash flow. Now this whole channel revolves around maximizing your cash flow. Like that's immediately where my mind goes, is I want you don't have to do it, but I always want you to at least be aware of what's possible. What is a possible better direction that you can be moving your money so that you're maximizing your cash flow? And if you don't do it, that's fine. There might be a good reason for it. Okay, but at least you know, and you're consciously making that decision to move it in a different way. Because if you can save a few pennies or a few dollars, that's maximizing, right? I don't say I'm here to help you do okay with your cash flow. I'm not here so you can have mediocre cash flow, right? I'm here to maximize your cash flow. So oftentimes when I'm talking about stuff, you personally might look at that solution and go, oh, that might only save me a couple of bucks. It's not even worth the headache. Okay, that's fine. That can be a good personal choice that you make. But I feel like I would be failing if I didn't let you know a better way to do it. Because if we just get in the habit, that's all that it really takes, is just getting in the habit of moving our money more efficiently. And once we get in that habit, it's not a hassle. It doesn't take that much effort. And things just start to really pick up. And that compounding, every dollar that we save starts to compound. Every dollar of interest that we don't pay to somebody else that we can offset, that goes into your cash flow and it can start compounding. And it can be beautiful. Hesleg, what do I think about doing a balance transfer every year for different credit cards to prevent from paying interest on bills until you pay them off? I love it. I think that's great. You just recently did this. You're thinking about doing this until all your credit card bills are paid off. Yeah, if you can do it, that's great. Now, usually there's a balance transfer fee, but that balance transfer fee might range from 3 to 5%. That's way less than what you would pay in interest charges if you carried that balance on a credit card. It's usually a lot less than if you were to carry that balance on a line of credit. It's not often that there's lines of credits that are lower than 3 or 5% interest. So I love the idea. I have no issues with using other people's money to get free use or nearly free use of those funds. The main thing is that we're treating it as a bill to be paid off eventually, and we're not just doing it to keep piling on our debt. So as long as it's part of an overall strategy to get yourself out of debt, I love it. I love it. What we don't want to do is we don't want to use it as a way to expand and live beyond our means. You know, we don't want to be just charging up 0% interest credit card debt on, you know, Christmas gifts or birthday gifts or just frivolous things that don't add value to your life or don't build, you know, they're not cash flowing assets. Ideally, we're going to utilize that for cash flowing assets, and we're going to take that cash from the cash flowing asset and use that to pay down the debt. So I love using other people's money for purchasing cash flowing assets. Malik, would an annuity be best for a 35-year-old client? Not likely. Will it work like a whole life policy minus the face amount? No. Most annuities, their best use is going to be in old age. There's a lot of different benefits that come from annuities, but you're only going to get paid out a percentage based on your age and like how likely you are to pass away. Unless you get one that just pays you out at a flat rate based on a number of years. So you can get annuities that pay out for the rest of your life. You can get annuities that pay out for a set period, like 5 years, 10 years, 15 years. I can't really see a use for a 35-year-old to have an annuity. There's a lot better options out there for investing. There's a lot better options for putting that money to work. So I guess I would ask, give me some more background on the situation where you think that it might come in handy. So there are some fixed index annuities out there that have they're deferred fixed index annuities, where you put the money into it, and while it's being deferred, they can give you a guaranteed roll-up rate that 10 years down the road, maybe even 20 years down the road, because they will give you the ability to extend it another 10 years. So you might be able to get 20 years out of this, where you get a guaranteed growth each year. A couple of years ago, there was a really good one. It was a guaranteed 7% roll-up, and they guaranteed it for 10 years, and during that 10 years, you could extend it one time for another 10 years. So you got potentially 20 years of guaranteed 7% roll-up. Now, that's not in cash. It's a guarantee that they will take that value and annuitize it for you at some point down the road within the next 10 or 20 years. Now, the annuitized rate that they would offer would end up being, a very small percentage, and it's going to get paid out to you for the rest of your life. Well, if you can get that 7% growth, it actually turned into pretty good numbers. So that might work for somebody who was a little closer to retirement, probably at least 40 or 45. Because if you can only get 20 years out of it, you're not going to want to annuitize that thing prior to age 65, because the rate that they're going to give you is just not going to be worth it. Yeah, they're going to guarantee you that growth, but they're going to take that growth and they're going to multiply it by some smaller number based on your age. And that number is going to be based on your life expectancy. Average life expectancy, not just yours, but the average life expectancy. So it could be a very small number. It's not very often a 35-year-old I would advise to get into something like that. A1, how you doing? You ask, do IUL loans work like whole life loans in the aspect of earning interest on borrowed loans like whole life infinite banking? Absolutely. They do. They work almost exactly the same. There's some slight differences. Typically, your whole life loans, you usually have either a direct recognition or a non-direct recognition option. And those vary depending on what the carrier offers. So the carrier offers one or the other. A very small number of carriers offer both options. And the ones I'm aware of, you have to choose one or the other right at the outset. So a direct recognition means they're going to recognize that you have a loan. And so they're going to adjust whether you get the dividend rate or a different rate based on whether you've taken a loan out or not. Non-direct recognition means they will ignore that you've taken a loan out, and you're still going to get the dividend rate regardless. So those are whole life choices. The IUL, every IUL carrier I'm aware of offers both of those types of loan options. They call it their standard loan, which is also sometimes thought of as a wash rate loan. And then they have an index loan. And sometimes they'll have a third option as well. But for our discussion, we'll just go with the two. So the wash rate loan, typically what that'll be is they'll charge you 2% or 3%, and they'll credit your policy that same 2 or 3% on however much you borrowed. So it ends up essentially being like a wash. So we call that a wash rate loan. The index loan, often called a participating index loan, means that one's like the non-direct recognition. They will ignore that you've taken a loan. You're going to pay either a variable rate or a fixed rate on the amount that you borrow, but the cash value in your policy or the accumulated value in your policy is going to grow based on how the index performs, not whether you've taken any money out of it or not. So yeah, it does work. The IUL loans work very good, just like the whole life and infinite banking loans. You got the same options. And in fact, I like taking the loans out of the index universal life even better than I do my whole life policies. Like those are the first place I go to because we have a really good chance for arbitrage out of those. Where like Allianz in particular, I like to borrow. I get to borrow at a 5% fixed rate for the life of the policy. I don't have to worry about that ever going up. We're in a very low interest rate environment. So to be able to lock that in and get 5% forever, that's awesome. And my growth in the policy is not going to be tied to that rate that I'm borrowing or the amount that I'm borrowing. It's still going to grow based on the index. And they've got some really great indexes with no caps and really good bonuses on them. So I could realistically earn 8, 10, 15, 20% even on those the cash value of my policy, regardless of whether I have a loan out. So I might be paying 5% interest and earning 20%. It's not going to happen every year, but it has happened in the recent past with Allianz in particular and their uncapped options, index options. So really good opportunity. Chris, you've been suggesting some dividend earning stocks on your channel polls. How have they been doing? Just curious. Should folks join your membership to get these tokens? What do you mean by tokens? Not sure what you mean by tokens. But yes, I have been posting dividends, and I'm posting daily dividend stocks. What I'm looking for is I'm trying to find, there's often a company that's giving out a dividend almost every day of the year. And a lot of times there's multiple companies. And so what I'm doing is I'm scouring them for what type of return is that dividend paying out. And the best ones The best ones are going to be the ones that pay out once a year, and it's a significant amount of dividend. So the challenge with these is like, I don't want to own these stocks for a whole year just to get a dividend one time. So my thinking is maybe on some of these I can just hop in at the end of the day or at some point throughout the day on the last day that I need to be an owner in order to get that dividend. And then I'll just get out of it the next day and see if that works. So I've had some mixed success. Overall positive though. So this week I got into, well, I started this last week. I got into a stock, NREF. Let's see. I bought this one at an average cost of $18.65. And I was able to sell it for $18.85. So I ended up with 800, or about 1,000 shares between my different accounts. I had about 1,000 shares. I bought it for $18.65, sold it for $18.85. So I made 20 cents on those for each share. And I got a dividend What was my dividend on this one? Hang on. It hasn't paid out yet. I got to look it up. The dividend on that one was 47.5 cents. So that was a really good trade. Really good trade. That 47.5 cents was like a 2.5% return. So not too bad. And then the next day, I hopped into a stock called MRCC. And these were ones I posted to let you guys know about. This one, the cost of the stock was right around 10 bucks. I think I spent, hang on a second, let's look it up. About $10.16. 10.17, 10.18, right around there. And I had 1,300 shares. Now, unfortunately, this one didn't work out so well. It sold out right when the market opened, and I ended up selling it for $9.68. The dividend that I earned on this one, the dividend I get on this one is 25 cents a share. So it went down more than 25 cents a share. So I ended up losing a little bit on that one. I ended up losing as much as the dividend. If I hadn't, the dividend would have been about 2.5%. Next one I got into, PHI. This one I bought in for about $27.28 average price. I ended up selling for $27.13 the next day. Now that one, so I lost on just the share itself, 15 cents per share. But the dividend's like 67 cents. So that was a win. And I was only in and out of this thing in one day. So that one was a big win. Next one, MNDO. That one I had an average price of about $3.06. This one, the dividend paid 26 cents. It was going to be an 8% return. But similar to the other lower cost one, it sold out a little bit too quickly, and I was able to get $2.94 out of it. So I lost about 12 cents per share, but the dividend is 26 cents. So it went from an 8% return to about a 4% return in one day. That's not too bad. I call that a win. The one I'm on right now, actually bought into it earlier today. I bought into it at 1861. I think it was 1861. And it actually went up throughout the day. I was in for like 800, 900 shares. It went up about $1. And so I was like, well, shoot, I'm just going to sell it. I'm not even waiting for the dividend. The dividend is 67 cents. Well, I sold it. I sold, and then it came back down a little bit, and so I bought back in right before the end of the day. And so we'll see how this one ends up tomorrow. But that one's going to be 67-cent dividend. And I'm in for an average cost of $19.23. I got 400 shares that I end up buying back in on for $19.23. I expect this one will sell down, but it's going to have to sell down over 60 cents for me to not make any money on that. I think there's a pretty good opportunity there. So I do post those plays. If you join as a channel member, you get to see that. I'm posting it in the community posts on YouTube, and I'm posting it in our Discord. So letting you guys know about those ahead of time. If you're interested in following along, join as a YouTube channel member or a patron. You get access to our Discord. And if you join as a YouTube member, you got access to those community posts that I put up as just for members only. Now, some of these dividend plays I put up as public so that anybody can see it. So keep an eye out. Interact with it. You know, I mean, people aren't really interacting with those community posts much, but if you do, if you see those and you find value in it, be sure to give it a like button or leave a comment and let me know that you're finding value in it so that I know to keep doing it. Because otherwise, if I'm short on time, I'm gonna not post it if I'm short on time. Okay, but I'm gonna spend my time focusing on where I think people are getting the most value. So if it doesn't look like people are paying attention to some of these things where I'm posting, I may not post it that day. So if you're looking at it and you're using something like that, be sure to let me know. And you can let me know the best by hitting that like button and leaving a comment. Should folks join my membership to get these suggestions? Yeah, of course. Of course. It helps to support the channel. You know, I mean, I'm here to provide value to you, but it helps. It helps when you show that support to the channel. You know, it's definitely helpful. Keeps me motivated in choosing what little spare time I have in putting more effort into things that will continue to provide you guys value. Malik, let's say a 30-year-old client has a lump sum and wants to put that money to work. You recommend IUL because of the age and financial situations. Would that be a good choice? Yes. For a 30-year-old client, I love an IUL. I love an IUL. Really great opportunity for growth. They get the downside protection, so they're not going to be disappointed. Let's say, like you could recommend that they participate in the stock market, and then they dump all that money in there, and the stock market drops the next day. And then they find out they don't have the stomach for that. Well, it's a little late. It's a little late for that. So an IUL is a great choice. Great choice for younger folks. The underlying cost of insurance is very small. The growth potential is really good. And as long as you're designing it correctly, I hope you're designing it correctly, they will have access to that money. Whereas if you use an annuity, they lose access to that money. With the IUL, they have access to all that money. So I love the IUL as a choice for that. All my young clients, I certainly like an IUL to help meet some of their financial needs. Now with most people, I want to take a look at what are your death benefit needs? Because the way we design IULs, we start off with low cash value, high death benefit, and we're going to move into old age to a point where we have high cash value and we're paying for a very small death benefit. So we're going to try and minimize that death benefit as much as possible. So as long as they're not using it to try and meet a death benefit need, I like it a lot. If they do want to meet a death benefit need, and some people definitely have a need for that, then maybe there's a blend in there where you can do some whole life insurance to help cover that death benefit need. Because a whole life, we're going to design that to still be liquid and have good cash value, but the death benefit's going to grow. And we're not going to try and minimize that death benefit in older age. We want to see that thing keep growing. Because that's what's going to help ensure that we pass on these generational gifts. Hesleg, how do you find out which dividend stocks are paying out and what date you should be in to receive the payout? I use Webull for a lot of it. There's probably a number of tools out there. I mean, I'm sure you could Google it as well. But I tend to find most of what I need in Webull. So if you're not if you're a member of Webull, not a member, if you use Webull as a brokerage, you can just go through in their marketplace section and search for it. If you're not using Webull, you should be. And you should check. I have a link to Webull in my comments in the chats here as a referral. Use that referral link. You can get a couple of free stocks for depositing $100. It's a good return on your investment right away. You don't even have to use that 100 to invest. You can withdraw it later and still keep your 2 stocks. But the platform itself, it's a great app. It's on your phone. It's also on the web. But it gives you charts that you can use. It gives you indicators you can use. It's a really great platform for getting information on the companies that you're investing in. Really, really great. Love it. It also provides all the news articles on those companies too. So it does a really great job. So much better than something like Robinhood. I love the user interface on Robinhood, but it's terrible for trying to figure out if you're investing in a good company or not, because it doesn't give you it doesn't give you the 8K and the 10K information. It doesn't give you the dividend information. It doesn't give you hardly any of the information about the companies. You can get all that with Webull. And everything's free, just like Robinhood. Everything is free on Webull. Real-time data, no charge for options, no charge for trading stocks. It's a great choice. So I highly recommend people get Webull if you don't have it. If you do, check it out there. But feel free to use Google too. Maybe Yahoo Finance. You could probably do a search for dividends in Yahoo Finance. A lot of different ways you can check that out. A1, do I work independently, single producing, or do I have a team? So a little bit of both. I'm mostly independent. I just do all the work myself. But I am starting to build a team underneath me of folks who want to design policies like I'm doing, and they want to have access to me to help make sure that they know how to design it for their clients, and I'm available for questions. So for anybody who's interested, any agents out there, if you're interested, just reach out to me. We can get you hooked up with my IMO, and yeah. So I am working on building a team. So, and I also work with IBC Global. You know, I'm part of their team when it comes to some of the whole life policies that I do. So Guardian and Mass Mutual, I'm part of IBC Global's team in that regard. So Malik, watching my IUL design strategies. You are sure being a young agent like yourself, learning from me is awesome. You're excited. Good, good, good. I like it. I like it. What I really like is that you're seeking out that information. Because when I got started doing this, I stumbled across the infinite banking concept because the company that I was working for just gave me a script. And they said, go talk to your clients, use this script. And I'm like, okay, but how about some training on the product? How about, like, I don't feel comfortable. Like, I don't know everything I would need to know about insurance so that I can go sell this stuff. So I need to know more. And they just didn't offer that. Like, a lot of these insurance companies out there, not the carriers themselves, but the marketing organizations that hire all the agents, that are the go-betweens between the insurance carriers and the independent agents. They do not provide the training. They do not teach you how to design all these policies. And the ones that they do, they usually teach you how to design them so that it maximally benefits them. It maximizes their income off of you, not your client's best interest. And I can't tell you how many people I've talked to that had no idea. Like a lot of insurance agents, they're not giving you a badly designed policy because they want to. They just don't know. They're not taught any other way. So hearing you, Malik, seeking out this information was the same path I went through when I got started. And I realized there was more out there than what I've been taught. And so I had to figure out how to design the IULs to the best. I did that on my own. Fortunately, I came across IBC Global, and Steve Parisi there, showed me how to design the policies with Guardian and Mass Mutual. That's been awesome. I love that. I love Steve. I love his approach there, and I love working with him. So he's got kind of the same attitude that I do, where it's all about the client. And oftentimes we'll work with clients that have reached out to both of us. And sometimes they'll work with his team, and sometimes they'll work with me. And between me and him, we just don't care. Like, take your pick. Yeah, if you work with them, I'm not going to get a commission on that. So not a big deal, though, because if they're providing you with what you need, I know they're going to design a good policy for you. And at the same time, if they were working with him and they come talk to me and they say they'd rather work with me, his attitude is, go for it. You know, he knows that I'm going to treat you well, and they will get a little bit of a cut of that because I'm on their team. So it ends up working out pretty good. But it begins with the whole attitude that the client comes first, and you get to work with whoever you want to, and we'll be happy either way. So A1, you're in Utah. Yeah, I love Steve. Yep, he's great. Steve's great. Malik, that's exactly what happened to you. So you took the initiative and seek knowledge from insurance rebels like myself. Good. Glad to hear it. Well, there's definitely a lot to learn out there. And what I did was, and I still do, I listen to every podcast that the agents put out there. Any agent that's doing high cash value designs like I do, I listen to all their podcasts. I watch their YouTube channels if I get a chance. Most of the time, I just listen to podcasts. But I always like to know what they're doing, because if I can become better, if I can provide a better service or a better product, or I can design a better product, I want to be able to do that. You know, I make it a point to know as much as I can about these products so that I can share that information with you guys. Now, down the road, and ideally I'm sharing it in videos for you guys, because down the road, at some point, I'm going to pass away. And all these clients that I'm working with, they're going to be given a different agent. They get assigned a different servicing agent for their policies. And most likely, that agent is not going to know what I know when it comes to designing these policies, or why we designed your policy the way we did. And so my hope is that my videos will live on, and you'll be able to train them. You'll be able to tell them what's in your best interest and know what you're talking about, because you were able to get that information from the videos that I put together. So Vivekar, count you in. Take me under your wing. Okay. I'm happy to work with you, Vivekar. It's been good. We're still in the. Oh, actually, we did just get started with one of them. We're still working on the other one. Oh, and speaking of which, I got to respond to your email. I remember seeing an email from you earlier today. If I haven't responded already, it's because I took a nap. I chose to take a nap before this live stream, but I'll get to it. All right, we're going on an hour and 10 minutes. If you guys have any more questions, ask them now, because I never did go get my water. My voice is starting to fail. And I think we're going to call it a night. But I appreciate you guys joining me tonight. It's been a while since we haven't spent all of this time talking about stocks and options. So it was great to talk insurance again, because that is like most of the focus of my day is life insurance. And I definitely think that there's a need for it in everybody's portfolio. So whether you found your way to my channel because of infinite banking or IULs or day trading and watching the stock market, there is a place in your portfolio for the type of insurance policies that I design. That is, that's what I'm hoping to get across here. Vivekar, you just want to put it out there. You recently got your policies via me, and my expert was top notch. I was the expert. You started talking to me after running through maybe 6 to 10 agents, and you were still not satisfied with what you were offered. Oh, wow. I didn't even know. I didn't realize you talked to that many agents before me. That's awesome. All right, Malik. You got the free consult. See you soon. Yeah, I'll be there. yeah, the best thing to do is if you guys want to meet up with me, if anybody wants to meet up with me, I posted my Calendly link again. Sign up for a meeting with me. I offer a 20-minute free option to anybody. So even if you're another agent and you just want to have a chat, feel free to sign up. But getting on my calendar that way is the absolute best way to do it. And I'm happy to talk with anybody about pretty much anything. So, Mary, thank you so much. I appreciate that. I appreciate that a lot. A1, do I mind sharing a little around my YouTube journey and how it has helped you in expanding your life insurance business? Sure. So, in fact, my YouTube journey is intricately tied to expanding my life insurance business. When I first started, I was working with an IMO, and we were focusing on the educators market. So we were working with teachers, trying to get them out of the stock market, out of just being 100% invested in stock market as they're getting close to retirement, and having them look at annuities and IULs. Because from our perspective, there's no reason when you're getting within 10 years of retirement that you should be at 100% risk in the stock market. At least some portion of your portfolio, you should look at securing, getting into a safe place where it's not at risk. And so that was the focus. I traveled a lot to California for training. I traveled a lot to California and Portland to work with teachers. And not too long after I got started, here in Oregon, the third-party administrator that handles most of the school districts in Oregon changed everything and basically made it so that only a handful of insurance companies that offered products that were 100% at risk in the market, those were the only ones that they were going to allow to continue offering or being able to move teachers into. And so it totally killed my ability to do anything. Because I'm not licensed to work in the stock market. I didn't want to be licensed. I still don't really want to be licensed to work in the stock market. I like doing what I'm doing with life insurance and providing protection against what you can get in the stock market. Because there's a good place for that. So it just so happened that while I was traveling between California and Portland and doing all these driving, I put on 80,000 miles on my car in 1 year. And while I was doing all that traveling, I started listening to YouTube. I started watching all the videos that I could on insurance. And that was when I stumbled across the infinite banking concept. And I just did the deep dive down that rabbit hole. And because I had so much time to drive, that was when I got subscribed to all the podcasts, every podcast I could listen to on the subject. And from there, when the third-party administrator changed the rules on us and made it so that I couldn't service those teachers, I was like, you know what? I'm pivoting. I'm going to focus on high cash value life insurance at that point. Because that also happened to be the time when I connected with Steve. Steve Parisi, that guy is great at follow-up. And I had been reaching out and putting out feelers trying to figure out what I was missing in regards to the infinite banking concept, because the videos that were out there did not give me all the information I needed to know. And so I was constantly trying to figure out what it is that I'm missing. Why can't I connect the dots on how this works? And so I ended up getting in contact with Steve at some point, and he started reaching out to me. And it happened to be right at that time I got taken out of the educator market. And I was like, okay, Steve, here's your shot. Tell me what you got. And so from then on, it was infinite banking for me. And I was learning about whole life insurance. And at that point, I was also figuring out how to design my own IULs. But my focus was going to be on the whole life. And so I hadn't started my YouTube channel yet. But there was another agent that was working, that got in with Steve at the same time. And that was Denzel Rodriguez, the finance geek. And he does velocity banking. And you guys have probably seen his channel. Denzel Rodriguez, we would do these webinars with Steve. And Steve would go over design and everything, and people would talk, and they'd say what they're doing. And Denzel was like, I'm doing this YouTube channel, and I'm doing velocity banking. And I'm having really good success with it. And I was like, oh, that's interesting. So I went and checked out his channel, watched it, and I was like, I love it. Like that, the velocity banking concept is like amazing. I love it. I immediately saw the benefits to it. And I started looking into that, and I saw almost everybody else, not Denzel, but almost everybody else was doing velocity banking in order to sell this $4,000 software program to help people eliminate their debt quickly. And Denzel would just educate people on how to do the numbers. And I was like, I love what he's doing there. I want to do the same thing. And so I started my channel to emulate that. And that was where I did dynamic banking. Dynamic banking is the same thing as velocity banking, but when I was looking it up, it looked like velocity banking had a trademark. And so I didn't want to have to worry about that. So I called it dynamic banking. And I started recording videos on that. I think my first couple of videos were on dynamic banking, and I was explaining the concept and why it worked. And what all of these other channels didn't do was they didn't show you exactly how it worked. And so that was what I decided I was going to do. I was going to do the numbers. So like Denzel did the numbers himself. He'd put in a plan, but he didn't illustrate exactly how it saved you the money. And like those are the details that I like. So I put together some spreadsheets and I showed people exactly how it worked. And from there, I went into adding content around the infinite banking. But originally I was thinking I would just do my YouTube channel as a way to help people eliminate debt, not as a way to promote any type of insurance products. I was gonna keep buying leads and do that out here. Well, it ended up that I put together some YouTube videos, and over the course of the next year, I had enough YouTube videos up that I started to get some interest on it. And it was actually shortly after I put out my first YouTube video on infinite banking that I got a really great customer from it. And that one made it click in my mind that like, oh, this thing can really work if I just keep making more videos. And so I did. And they weren't great videos, like not production-wise. I had to take the time to learn how to do all the editing and production, and it was a slog, but I made it through it. And luckily, my wife had a decent job, and we didn't rely a whole lot on my income while I was learning and growing this stuff. And so I was able to take basically a year and just keep putting content out there. I keep putting videos out there, and I was able to explain the concepts that I was trying to do. I was able to make sure I was addressing the needs that I wasn't seeing from other people. And people were being receptive, and every once in a while somebody would call me from it. And I connected with Calendly, and I got my Calendly link, and I figured out that, oh, if I put this out there, it's a really easy way for people to just sign up and have a meeting with me. And so when I did that, that was like the game changer. Once I was able to put my calendar up there where people can all across the country just get on my calendar and pick a time slot, it started to fill up. I started to get a couple of meetings a week. And then I started to get a meeting a day. And then I started to get a couple meetings a day. And now I'm at a point where it's like I could fill my whole day up with meetings. I probably do 6 meetings a day right now. And I reserve half of that day. I reserve half the day where I can do follow-up and check on my other clients. And I spend a little bit at the beginning of the day doing some day trading and playing around in the stock market. So now my day is basically filled up with meetings, end to end. It's a really tough schedule, but I'm enjoying the heck out of it. So that's it. That was my story. You're working with Steve and his IBC program. You're also a member of Denzel's Velocity Banking program. Nice, nice. You're partnered with one of the big infinite banking marketing guys out here. But it totally... Oh, I don't know what you were trying to say there. You looked over... Oh, let's see. Oh, but it totally capped, and you're looking to start your own channel to generate awareness and drive business. All right. Well, good luck to you, man. Good luck to you. I think it's great. There's definitely room out there, I think. Like, for me, I'm all about getting more information out there to people so that they can learn whatever it is they're trying to learn. And what happens, the beautiful thing about YouTube is it ends up being self-selecting. Clients who like your personality, clients who are drawn to how you approach things and how you teach things, they're going to be the ones that talk to you. And it ends up being a fairly easy way to conduct business. And I found that it's great. You know, you can put out your channel, you'll put out your educational videos, people will watch you, they'll watch me, and whichever one that they feel like they might work better with, that's who they'll call. Maybe they'll talk to both of us just to make sure that they're getting a good second opinion, right? And that's cool too. But as long as they get choices out there, and they're going to end up getting a good design, we're empowering the clients. We're empowering them, and I think that's a win-win. So good luck to you and your channel. I think that's great. Jones, you looked over a lot of videos and books to learn about how velocity banking works. They were not rigorous enough for you. When you found my videos, it became much clearer for you. Thanks. You're welcome. That's awesome. I love hearing that, because yeah, that was my goal. It was the same way for me. Like, I've gone through so many different things, and like, people just, it's like they're giving up the secret, right? There's this little bit that they withhold. And I think it's kind of a marketing tactic because they want people to contact them. You know, it's a sales tactic. I don't worry so much about that. You know, I'm not trying to build a $100 million business here. If I was, maybe I would engage in some of that stuff. But I mean, it just doesn't suit me personally. And also, my channel happened to blow up at the same time that, you know, the pandemic locked everything down. So I haven't been able to even consider hiring people to help me out here. So maybe that'll change in the future as well. But as it is, I just do all this stuff on my own, try and help as many people as I can, and keep providing as much value. So I welcome you all to join me. Start up your YouTube channels, and good luck to us all. So with that, my voice is about shot. So I'm gonna have to hop out of here. Canirdo, thank you. Thank you. Good night. Do I still do the morning stock watch? Haven't seen notifications. Oh, absolutely. I do it every day. So I'm not sure why you haven't got the notifications, but you might try and click off on the subs. Just unsubscribe and then subscribe again. And when you subscribe, make sure you ding the bell and turn on all notifications, and then you'll be able to hear about it. But yeah, absolutely. We still do it every single day that the market's open, as long as I'm not sick. But I think I've only missed like 1 or 2 days probably in the last 7 or 8 months. So yeah, so I appreciate that. Thank you for the super chat. I appreciate that. All right, I'm going to play you guys out with some music. We'll be back next week for our Wealth Care Wednesday. I hope you join me. And in the meantime, we start off every weekday with the stock market opening. So join me for that as well if that's your thing. If it's not, I hope you have a great week. And if you want to have a meeting, be sure to sign up. Check out my Calendly, calendly.com/cashflowpro. Have a good night, everybody. We'll see you later. Oh, not that button. That one.